Welcome to Sterling Insights, Stand Out and Supercharge Your Assets, the go-to podcast for financial advisors aiming to grow their assets under management, stand out in a crowded market, and retain assets nearly forever. Are you advising high net worth clients who own appreciated capital assets? Do you want to help them sell without losing a quarter, a third, or even more of their hard-earned profits to capital gains taxes? Then this podcast is tailored for you. Each episode brings you the latest strategies and expert advice from leading financial advisors, seasoned attorneys, and experienced CPAs. Learn how to maximize your clients' wealth, minimize their taxes, and supercharge your advisory practice with actionable insights. Join us on Sterling Insights, Stand Out and Supercharge Your Assets, where you'll gain the knowledge and tools to set yourself apart and achieve unparalleled success in wealth management. Subscribe now and empower your practice for a brighter, more prosperous future.
Welcome to Sterling Insights Supercharge Your Assets podcast. This is Charles Trakas, guest host here with Parth Mehta. Parth Mehta is the owner of Parth Mehta CPA Professional Corporation. He is a CPA giving small businesses the personal attention big firms can't. How are you doing today, Parth?
I'm doing well. Thank you for having me, Charles.
You are welcome. So, tell me, what made you get into the accounting industry?
I've always had a niche for numbers since high school. Actually, in elementary school, I always scored an A in math and a C or D in everything else. And in high school, it was more the same. But now I've had an itch for financial statements since high school in business class. And especially goes further on in college when I took my first tax course as an accounting major. That's when I found my passion for tax accounting. It's something I actually enjoy.
Not many people enjoy reading the codes and codes and codes of taxation.
Well, I do actually.
So tell me where you started in the industry. Did you work like for, any big firms? Did you work for yourself? Tell me how you began and basically how you got to your current position.
I started several years ago, I think in 2019, at a small firm. It was about 30 to 40 accountants. And as time went on, I evolved and attempted to get into larger firms for the growth and training that they provide. And they certainly do provide that. I eventually came across my last firm. It was a mid-tier firm. It was a top 50 firm. Fantastic firm. I specialized in the small businesses and high net worth individuals with that company. And I learned enough where I can now branch out and work on my own. Since starting out, I've actually had a side hustle since about 2019 where I worked on only a few clients here and there. But after this past tax season, I decided I'm going full scale with my business. And I realized I can charge substantially less and pay myself more, and still be profitable, while still giving clients the attention that they deserve.
Tell me what specific you bring to the business owner since you started and going full force this last year.
Specifically,
Is there a specific niche that you specialize with, you're a small business owner, or is there like a overall, package that you're providing?
there's an overall package for some small businesses, but I do specialize and have a certain expertise in real estate investments, medical practices, and a certain niche that I'm passionate about, which is in entertainment, primarily comic book artists and writers.
Explain that more when you say, how does that help your clients? Explain that, please.
Now, it helps them because I'm familiar with the industries that they're in, especially in real estate. There are certain laws in real estate that many are not aware of, especially as partners in a partnership.
Mm-hmm.
There's certain laws that many clients just do not know. I actually dealt with a client just last week. It's a new client, and his previous accountant put his rental property in an S corp. It's been in there for 6 years, and to my surprise, it should not have been there. Now, in order to get out of the S corp, he'd have to pay a built-in gain tax of over $300,000.
So these are some of the common issues that you help your clients with and you see them doing wrong. What other things do you see them doing wrong that you've been helping a lot recently with?
One thing I see is with personal contractors. When making projections on their taxes, they typically leave out their self-employment tax. That's 15.3% that they pay without realizing it, and they can plan accordingly by creating an S corp. But when going to New York and talking to potential clients, many of them are still just sole proprietors and they do not realize this loophole on how they can reduce it. They can't completely eliminate it. They still have to go on payroll as an S corp, but they can reduce it significantly.
So, are you providing not only the tax preparation, the compliance, are you also providing like bookkeeping, analysis, reporting? Explain exactly what you do provide.
So for small businesses, I provide bookkeeping either monthly or quarterly, depending on what you need. And if you do your own bookkeeping, then I will provide a year-end cleanup to make sure your books are in order and I can prepare your tax return from there. After your taxes are completed, I'll make sure to go through the return with you to make sure there are ways I can help you save on taxes going forward. Because tax preparation is not how you save money, it's with the planning and projections that you save on taxes.
Tell me a story about one of your new clients. You just told me one. Tell me something gone wrong. You discovered it, provided it, and the true value that it brought to them. Tax savings, benefits, that type of thing. Is there anything off the top of your head?
I have a recent client I just consulted with. He is running a window washing company out on Long Island. So he started a couple years ago and he's been a sole proprietor. So in his case, he actually paid about several thousand, I think about 7 to 10,000 in self-employment taxes. As his new accountant, I advised him, starting in 2026, we are going to set up an S corp for you. Now, as an S corp, we can place half of your business profits as payroll, so you will still pay the self-employment tax on that, but the other half you will save on those taxes, and this will save you about 3 to 4,000 a year. Beyond that, as an S corp, you will now be allowed to deduct the state taxes through the New York State pass-through entity tax. Surprisingly, many accountants do not want to help with this. This combined would save him about 5 or 6,000 more per year.
Seems like you have a lot of clients in the state of New York where you're a little specializing in. And it seems like every state that we come across, there are definitely different tax rules. What happened after you provided that to the client? What did they say to you? I mean, did they introduce you to someone else?
This consultation was literally just this week, and we're still working on it. This is for tax planning in 2026. As it always goes, they will not see the benefit of this for about a year and a half from now.
So it looks like you're going in, you're cleaning up, you're pointing them in the right direction, and then you have basically like an audit or a follow-up system to make sure that they stay above and are successful and not putting certain categories in the wrong categories or not putting them in there at all, I should say. Is that about accurate?
Yes, the bookkeeping part, that part is accurate.
But is that a service for all of your clients?
Yes, it is. That's a given, along with the tax planning and project and advisory. Because I feel like if your accountant doesn't give you actual planning and advisory services, then that's basically theft. That's exactly what you pay for. You're not paying them just to input a few numbers into a computer.
Right. No, I agree. So you're being proactive, instead of reactive and worrying about just compliance and audit, which most CPAs do with their practice. They're fortunate to find folks like yourself. Tell me a story of something going right for you
Something
with a case, with a client.
Here's a client in Florida. Him and three brothers are purchased a rental property in Florida, and they needed help on how to report it. Now, so a couple of the brothers are extremely frugal, and they thought they can just report their income on their 1040s by splitting the income and just reporting it directly. I had to explain to them in detail why they cannot do that and why they had to create a partnership return. After hours of convincing or hours of talking, we eventually ended the call, and I had to email the main brother that if you do not create a partnership, then I cannot help you. I've prepared hundreds of partnership returns with rental properties, and I've never prepared a return in the manner discussed in this call. Thinking I wouldn't hear back, 6 days later, he got back to me and said, "We want to file with you directly. Talk about doing things right."
Great story.
I recently just filed his LLC for the rental property, and we're cleaning up his initial books right now.
What was his perception, initially? Why wasn't he willing to agree to it?
He doesn't want to pay for a partnership return. The preparation filing of a partnership return.
So he was worried about the fee
Exactly.
filing versus really the liability that was out there if he didn't complete it. Tell me, what's your biggest challenge?
My biggest challenge is convincing clients that they need to report all of their income and they need to account for the self-employment tax.
So you have a lot of self-employed business owners
Correct.
that
A
really
lot of one-man operations.
Yep, they're the ones because they don't have the resources to help them. Do you have a staff? Do you outsource? How do you work?
I recently left my job at the mid-tier firm less than 3 months ago, went full scale. I do not have any staff. Everything
Okay.
is done by me.
So
All
you're
client contact, preparations, advisory, planning is done by me. So there's no shuffling around. It's more efficient that way.
so you're building. That's
Yeah.
good. Seems like you like being in the trenches.
I love it. Plus, I don't have to wait for anyone. I can work the way I want. I pick the hours, which I still work more hours, but that's expected when you're a business owner. Some clients that like to commit fraud, I turn them away. Whereas when you're at certain accounting firms, such as some smaller firms I've been to, they tell you to just hide it. You do what you're told to do. Your name, and they say your name is not the one on the return, so don't worry about it. I don't want to work like that anymore, and I'm glad I don't have to.
And that's good. Congratulations.
Thank you.
That is great. Biggest thing as always, where can people find you?
They can find me on my website, parthmetacpa.com. I'm on LinkedIn, and on my website, we'll have my direct contact information, my phone number, email, and a link to schedule a free consultation where I'll answer any tax and finance questions that you have.
Are you just in a certain area, geographical, or are you national? Do you license work? You work everywhere?
Most of my clients are in New York, since that's where I've worked the last 6 years. I'm currently based in Philadelphia. I work virtually. I can work with you essentially all across the country.
And that is nowadays, as we're sitting here talking on a Zoom, and that is going forward, basically being able to help everyone. I had a call this morning from somebody in California around noontime. So no.
Awesome.
Yeah, no, the big bill. That's what I wanted to ask you. Are you taking advantage with your clients with the big bill? And, the
Yes.
qualified business income is one that people talk about, but there's a lot of different codes that the business owners should be taking advantage of. Which ones are you providing or, presenting to your clients now?
To keep things, the first and foremost, the simplest one is the extension of the lower tax rates. A lot of clients don't know this. They think, oh, we're going to pay lower taxes now. No, they're going to continue paying the same low tax rates that they were after 2017. So it's all about advisory also. One provision I'm definitely taking advantage of is the permanent placement of the bonus depreciation. These are primarily for startup companies that have large assets in their first year. They're not profitable yet, but they can still take that loss.
Could you explain a little more in detail about the bonus depreciation?
Yes. So the bonus depreciation allows you to, if you have an asset that you place into service, say it's a type of machinery, some office equipment, does not include real property like real estate, you can depreciate the full amount of that purchase in the year that you place it. Generally, it would be either depreciated over 5 or 7 years, but bonus allows you to take it in the first year. There's also section 179, but there's no change to that. And 179 is allowed only if your business is profitable. And that is why bonus is more important, because many startups are not profitable in the first year.
No, that is great. That is great information. And again, where can our audience find you?
ParthMehtaCPA.com. Would you like me to spell that?
Please.
ParthMehta CPA.com.
And I noticed that you have MST behind your name as well, which is for.
That's my Master of Science in Taxation.
That's a great designation to have.
I'm proud to have it. Hofstra was an amazing school. Fantastic tax program.
Nope, I have I have friends who went there. Great school. Nope. Nope. I want to thank you today. I want to thank everyone for watching or listening to the Sterling Insight Supercharge Your Asset podcast.
Thank you for listening to another episode of Sterling Insights, Stand Out and Supercharge Your Assets, where we provide the info you need from successful leading financial advisors, lawyers, and CPAs. Your hosts, Roger and Catherine Silk, invite you to learn more about Sterling Foundation Management by visiting sterlingfoundations.com.